Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. So guys, as we have new inputs on the euro currency, let's go back to the discussion of our primary currency. If you remember the recent analysis when we have prepared, we said that we should not be deceived by the recent upward action, because this action is mostly the reaction on just worse data that has been released previously in the United States industrial production, and we said that do not overestimate the importance of this data and the reaction of the euro that shows on this action on this data. And we said that here we would not see yet any changes in shifting in the sentiment, and probably we should use any rally that we will get for the chance for possible taking the short position, because our primary object here is the butterfly that points on the 103 destination. And after that, this butterfly, particularly this pattern, could become the triggering pattern for something bigger. I mean the possible retracement on the monthly chart, because we know that on monthly euro stands at monthly oversold and at important 105 support. So, and the butterfly, particularly this pattern, could become the one that will trigger the meaningful and significant retracement on the euro currency. But that should happen a bit later, because this pattern has not been completed yet. That's our major analysis, medium-term analysis on the euro currency. It means that the current action that we see on the current week, on the recent fourth sessions, upward action, we should treat as the retracement and a possible rally to sell into. At least this is our current view on the euro currency. And take a look at yesterday. In fact, you can see this upward action takes the shape of some flag. You see it, so this narrow upward consolidation, and the market shows a lot of overlapping candles. You can see that the retracement on the next day in the body of the previous session is very significant. It's even more than the 618 returnings. And finally, yesterday market has formed a pattern. So you can see that is the bearish stop grabber. This bearish stop grabber suggests the taking out of these lows, and as you can see, it stands very close to that loss, and it's very difficult to believe that if market will return it back down and trigger these lows, it will left behind that loss. In fact, we think that, as we said, that will be the nested action. So we can see, for example, market will take these lows, some stops will be triggered, market will fly and drop right to this one. Below these lows, another stops will be triggered. That's more significant stops here. That will let market to reach precisely its 103 areas, 127 butterfly pattern. One thing that we do not want to see here, I mean from the bearish perspective, is that market action above this top, above the top of the grabber and the closing above it. In this case, the grabber will be erased, and we will have to search for some new information, some new inputs to make the correct judgment on the overall situation. But right now, this pattern is still valid, and especially, guys, if today we will get the supportive CPI data, this inflation data, we probably could count on the possible drop. For example, if the inflation will be at least according to the expectation or even better. In this case, that could significantly clarify and improve the position of the bears, as trigger the further downward action on the euro currency. So that's what we see on the daily chart. On the 4-hour time frame chart, we also see some supportive moments. So as you can see, market right now is stuck inside of the resistance clusters. That's the area between the 50% resistance and 618 resistance, the major fib levels of that thrust down. And what is interesting is that market has formed the perfect 3-drive sell pattern. It already has been completed. So you could just check the extensions. I I have deleted it because just to keep the chart clear, but I could show you right now. So you can see that the second drive stands right at the 127 extension. Third drive stands at 1618 of the first. And if you will measure the second extension, you will see that this will be also the 127 of the second. So the crossing of the extensions of the first and second drive and the third drive stands precisely at the same area. So from that standpoint, the 3-drive pattern has been completed, and it could become the reversal pattern for the possible reversal here to the downside. At least, as you can see, currently, guys, it looks really pretty from the bearish point of view, and we can't just desire more here. So market has formed the grabber, market has formed the 3-drive sell right at the resistance. So anything could happen, of course, but from the technical point of view, this situation looks absolutely logical when the lower time frame chart patterns support higher time frame chart patterns. So grabbers suggest move down. The 3-drive is the pattern that could trigger this move down. Okay, so if you're searching for the short position, I think that the better situation you will not get here, because the market right now stands at the point that is very close to invalidation point of the short-term bearish scenario. So if market will move higher here, and especially if it will close above the grabber, above the daily time frame chart grabber, that will put a significant shadow on the perspective of the bullish development. Because market already has shown nice retracement right to the monthly pivot point, by the way. That guy is also the monthly pivot point here. It has formed the reversal pattern. So what else should be done for possible taking the short position? And here you will be able to place the relatively tight stop for positioning yourself for this 3-drive. But the major risk here is the inflation data, because if it will be weak and the inflation will be anemic, that really could show the upward volatility, and it's really a significant risk for being washed out by the data release later in the day. So, or you could wait for a data release and after that take the decision. But from the technical point of view, from the patterns framework, you can see that everything in place right now, and this is really supportive for the downward continuation. So let's see how it will turn. The situation on the euro currency right now is very interesting and attractive, because market recently and right now is forming a lot of different patterns, as on the higher time frame charts, as on the daily intraday charts. So it's really almost every day we have something to trade. So let's see what will happen on this consumer price index release and how it will impact on the short-term perspective of the year.